Last week, we saw a slew of half-year corporate earnings releases: Dangote Cement, FBNH, MTN Nigeria, and so on. Well, Ayodeji Ebo, Head Retail Investment at Chapel Hill Dunham, joins us now to x-ray some of these results and what they will mean for the equities market going forward. Good morning, Ayodeji. Thank you for joining us.
Good morning.
Yeah, we saw several companies publish their half-year earnings last week. What's your overall assessment of the results before we go into specifics?
Okay, thanks. Taking an overall view about looking at the results, we saw more positive results than, let's say, flat or negative results. So I believe that part of the improvement in business activities also impacted on this result, because for most of them we saw that year-on-year growth on the top line, and a lot of them also enjoy in terms of backlog of demand as a result of the opening up of the economy. And when you look at the second quarter for last year, it was when it was at the peak of the COVID-19 pandemic, where a lot of businesses were shut down. So that also served for some, that base effect also helped in terms of year-on-year. But for some of them, we also saw that slowdown in terms of a quarter-on-quarter basis, which means that's comparing it to the first quarter of this year. But by and large, it's been positive, and that's also responsible for that positive sentiment that we're seeing in the market in some select stocks.
Now let's look at the telecom sector. What stood out for you there, and what's your outlook?
Okay, thanks. I think very interesting. If we look across both MTN and Airtel Africa, we saw that increase in average revenue per user, what we call Apple, increased by over 30% for both companies. And however, the number of subscribers within the quarter reduced. So looking at the Apple that have increased, it means Nigerians are spending more on the use of either data or voice, and that may be linked to what would say the new work structure, that you have more people working from home, and that's necessitated the use of more voice and data. Now, going specifically into the companies, when you look at MTN, for instance, the top line also increased by about 24% to about 791 billion naira, and the bottom line increased by about 49% to about 141 billion naira. And breaking down the top line, we saw that there was an increase of about 14%, average of about 14% in both voice and data. But interestingly, looking at the revenue from SMS, that increased by over 5 times, which is pointing to the fact that maybe more people are using SMS to communicate than the normal WhatsApp, because that was a major surprise. Or maybe looking at it based on last year, a lot of people did not use SMS. We have more people at home during the lockdown, and there was no reason for people to exchange messages. So, but by and large, for you look at based on the ratios, EBIT margin and also the PBT margin also improved to about 34% and 24% respectively. Now to Airtel Africa, Nigeria still continue to account for a major part of the business, over 35%, followed by East Africa. Top line also improved, was very impressive. And looking at the bottom line, increased by about 149% and to about $142 million. That's really very positive. And in terms of the margins, they also increased by about to about 20% for the EBIT margin and PBT margin. So by and large, for that sector, it's very interesting. And looking at the outlook expectation, we expect that the demand for voice and data will be sustained for the rest of the year, which means that for investors, they can also position You look at MTN, it's based on the current price and based on our target price, it's still at a significant discount to our projection. MTN is also paying a dividend of about 4 naira, 2 naira 55 kobo, beg your pardon, per share, and which we feel is also positive. Yield is around, I think, 2%. And for Airtel Africa, we're also positive that by the end of the year, their dividend will also be positive. So I think in summary, the telecom sector, you look at it based on a GDP base too, is also benefiting from the business activities and the new structure of the economy.
Okay, let's look at the industrial sector. What do you think characterized that sector?
Okay, thanks. That's mostly when we want to look at it based on GDP classification, building materials. And what we saw that stood out, the three companies that are quoted, you saw Lafarge, Lafarge Cement, Boa Cement, and Dangote Cement. We saw that significant surge in their top line, which we linked to maybe the accumulation or backlog of demand. During the lockdown, a lot of business activities halted, and as a result of that, most of construction activities were halted. But what we're seeing is that a lot of those construction activities is picking up, and that has helped in terms of the demand for its product. We're starting with Dangote Cement that has the highest in terms of EBIT margin and PBT margin of about 40%. And same with Boa Cement, where the EBIT margin, that's earnings before interest and tax margin, is also about 40%. And but compared to Lafarge, the EBIT margin is around 26%. But we believe that for that sector, looking at what they've been able to, based on their performance for the half year, both grew. When you look at across their top line increased significantly by over between 20 to 30%, which is also very impressive. And we believe that construction activities will be sustained for the rest of the year. Yes, we are wary of the third wave of COVID-19 pandemic, but we believe that there would be no significant lockdown. It will be more of public awareness and putting checks and balances in place. So for investors, they looking at the outlook, it's also a sector that they should also pitch their tent. We believe that they will also sustain their impressive dividend payment within that sector, which for us, we believe is also a buy.
And when we look at the banking sector, we saw just a few. Let's take a shot from FBNH half-year results. Do you expect other banks to follow this trend?
Okay, thanks, Chemeze. I look at the two banks that are published so far, FCMB and FBN. They are both holding companies, and we would say the banking sector did start on a very positive note. And looking specifically into FBN, top line was just flat for about 1.7% on a year-on-year basis, but bottom line declined by about 20%. And you also want to look at what's responsible for that for what we call poor performance or not too impressive. You would discover that the OPEX increased by over 20%, and that led to the increase in cost to income ratio to about 70%. So when you are looking at it in terms of metrics, the ratio, so First Bank cost to income about 70%, ROE of about 10%. We look at to the likes of GTB, which has a cost to income ratio of less than 40% and ROE of over 20%. It means that there's still a lot that needs to be done in terms of efficiency. There needs to be a way to bring down costs as much as possible. One positive thing that we saw there was the improvement in impairment charges, which we attribute to First Bank's exposure to the upstream sector, which we can also link that to the improvement in oil prices, which would have led to write-backs compared to when we look at it on a year-on-year basis. But I think by and large, there's still a lot that needs to be done. And in terms of expectation for other banks, we believe the top banks, the likes of GT Bank, Zenith, UBA, Access Bank, that customary they pay also pay interim dividend. And sorry, I missed out Stanbic. They also pay interim dividend. We believe that their performance should be positive, both from a top line and bottom line perspectives. Though we expect that, yes, due to cost of doing business that have increased in Nigeria, OPEX may be on the high side, but we are positive, and we believe that on the minimum they would be able to pay the interim dividend that were paid last year. So we still believe that those top banks for investors is also a buy.
And what's your take on the earnings from the oil and gas sector?
Okay, thanks. I think for the oil and gas sector, we have the upstream and the downstream. We can see on a year-on-year basis, the sector on a year-on-year basis have improved significantly. The sector was really beaten as a result of drop in oil prices when you check last year on a year-on-year basis. So speaking to Seplat that operates within the upstream space, we saw that improvement in the top line for Seplat Energy. And you also, when you look at their profit, they've moved from a loss position about $110 million last year to currently think about $40 million. I've not mixed that up, and we attribute that to the improvement in oil prices, which currently it's around 70, at least above $65 per barrel. And when you look at it within the quarter, there was a significant improvement compared to last year that it tanked to close to about $30 per barrel. Then looking at the OPEX, because we were not too impressed with the bottom line for Seplat, we saw the finance charges rather increased significantly. Seplat raised about $650 million from Eurobond in the last quarter, and part of the proceeds of that, utilization of that fund, they used that to offset their 2023 Eurobond of about $350 million, and about $250 million was also used to pay for some of their drawings that they made before they raised the funds. So we believe over time the huge finance costs should normalize, and if oil price is also sustained at that level. And also to note that Seplat sustained its new dividend policy, quarterly dividend policy, also paid 25 cents, and when you convert that to naira, that's over 100 naira per share. So we believe that is also positive, and investors that are looking for cash flow would also try to pitch their tent in that stock.
And how do you think these earnings will shape trading activities for the week and, of course, into the new month?
Okay, thanks. Based on some of the companies that I've analyzed so far, you would agree with me that we'll have more positive earnings than negative earnings. And we believe that would shape the direction in the market. We expect more positive sentiment, and we also know when you look at the culture or the habit of Nigerian investors, they buy stocks because of dividend. We know a lot of companies also declare interim dividend, and we've been seeing early bird positioning. We expect that some of the banks that we're still expecting, we believe that there will still be strong interest in those banks. And for those that have declared dividend, the likes of Seplat, likes of MTN, we would also see investors also taking position in those stocks. So for the week, we believe that we imagine market will still gain positive, but could be specific to few stocks that have positive expectation in terms of numbers. And for the rest of the year, we would tie our expectation or outlook to the the direction of fixed income rates in the fixed income market. Yes, we expect that we may see some moderations. Liquidity will be higher within this quarter, and that would also impact on the direction of yields, which would also be positive for the equities markets.
All right. Thank you very much for your time, Ayodeji Evo. We do appreciate it.
Thanks, Bob.